It's Mark here, and welcome back to Digi Profits. Hey everyone, it's Mark here, and welcome back to Digi Profits. In this particular video, we're going to look at price action on Jewel from DeFi Kingdoms. We're also going to have a quick look at the overall macro because it's quite important because we've got the consumer price index coming out tomorrow in the United States, and that could cause some volatility. So let's have a look at where things may head. Okay, so for now, at the moment, we are still channeling in on this downtrend. Okay, we've got this downtrend going on. Yes, I get that this is technical analysis on an altcoin, which can be very sketchy at times, but it has certainly been helpful because it lets you know it lets you know what the next targets are and so forth, and it can just give you a little window of an indication as to what's going on, even if you didn't know the specific details about what caused it. You can still see, what's got broken through, what levels that we want to hit to at least have some indications that things are bullish. Okay, so we've got the squeeze going on here, and what tends to happen with these squeezes is sometimes you get in a little squeeze and it pops up, like over here, back here, same thing, little squeeze, popped up, little squeeze back here, popped up. But every time it pops up, it's because there's been a catalyst at that right place, right time, so that it can take advantage of it. And when there isn't a catalyst, it can go the other way. You can end up like squeezing in like we did in this little period here, and then we had a little bit of negative sentiment with a few pieces of news coming out about DeFi Kingdoms that caused a bit of fear, uncertainty, and doubt. Bitcoin dropped in price, and kabang, it went down. Okay, so it can go the other way as well. And at the moment, I believe that it's very hard to predict where we're going to go. If we don't go sideways, though, through there, it's hard to see it pop significantly because the market right now overall is bearish. The macro is bearish with consumer price index coming out tomorrow. It's all volatile. Like if that doesn't show a drop in consumer price index, then it's hard to see it going bullish straight away. So you could find even more people go risk off, maybe not immediately, but certainly within a short period of time of stuff coming out, and then you could see it drop to the next fib level, or angled, or carry on angling into this little channel here. But we've got this wider downtrend line here that still has not been broken all the way back to, when it started at Crystal Vale. It's still there. We haven't got past it yet. So if we don't get past it, then we're going to shoot down there. It's a tricky one because at the same time, there's some bullish things coming up. There's obviously questing on Crystal Vale. There's utility for the pets. They've talked about that coming out, and then everyone's going to want more pets if we can go ahead and take them on quests with our gardeners and so forth to do better. We've got level 10 questing coming out. We've got obviously with Jewel burned as the gas token, all the quests on Crystal Vale are going to result in burning some more Jewel, and it'll get more people into Jewel/X Jewel over there on Crystal Vale, which means people have to buy more Jewel to go there so that they can garden from there, like use their gardeners over there. There is player versus player, which is going to result in more people needing more heroes, and if they need more heroes, they buy them with Jewel. Hero is basically a staked Jewel in a way. So there are definitely bullish things that could cause it to go sideways or pop up, but I'm at the moment cautious. I'm more bearish than I am bullish for now. I'm long-term bullish, short-term very cautious/bearish. So that's why, just done small buy-ins and so forth and haven't made major plays yet. Overall, looking at the stock market, as you can see, we've hit this fib level here. Now we're testing support here. The 200-day moving average often holds a support, except during this COVID time here, but often the 200-day moving average holds a support. So a lot of people are thinking that we may go down as far as the 200-day moving average there, and also on Bitcoin. So if we hit it on Bitcoin, the 200-day moving average, that's currently at 22.6k. By the time we hit it, though, it might be 24k or 25. It could be right up here, and hence double bottom. You're just retesting the lows from over there. So whether it's another leg down into here, a bit lower, or it hits there, it's hard to say. Certainly, over looking at some other charts over here, we can see from the RSI that we are at a traditional low for Bitcoin already, although the average itself has not come down and hit it yet. So just to bear in mind, but certainly it doesn't always hit it, the average. And on the qualitative easing graph, I'll try and bring that more onto the screen here, which is more accurate than the RSI. Compared to other time periods, we are certainly, in fact, I'll just try and get the dates in there if I can get this to come up a bit more. We are at a point where traditionally that is the bottom for Bitcoin. It has always been the bottom when the blue hasn't got there yet. So according to this, we're not quite there, but it's always been the bottom inside that range, okay, which will be around about the 200-day moving average. All right, going all the way back in time, it's always been the bottoms, of these market cycles, okay? But that's not statistically significant when it's only been around for 12 years. Okay, only been around 12 years. Okay, the regression graph can show us same thing. We often flatten out at the 200-day moving average. This is the blue line. We touched it there. Went through it just for a few days with COVID, but hit it there as support. Move my face out of the way, and then we're almost at it again now. So, with all of this in mind, a lot of people think, well, this is near the bottom, right? And it could be. It could be near the bottom. In fact, the Fed's probably likely to be more hawkish and put out, raise interest rates for a few more periods. It might be 2 or 3 more. Lots of 50 basis point hikes, and then that might be it. It might be low hikes or no hikes at all, and then the market may just trend along slowly but then go bullish, right, from there. So it could be several months into next year, end of next year, mid next year, whatever, and while it trends upwards slowly, okay? That could happen. So we could be near the bottom. The bottom may be around September. That's probably the most likely scenario. But I want you to also bear in mind the bearish scenario is that, well, Bitcoin's only been around for 12 years. So what's happened in the past with the stock market? Have we gone lower than this point? Yes, we have. We have gone lower. So subprime mortgage crisis was the last time that we went to this lower level right there. Subprime mortgage crisis there. Then we've got, so here, subprime mortgage crisis. We've got the dot-com bubble bursting over there. Further back, we've got the 1988, I think it was 88 or 87 stock market crash. And before that, we've got the 1973-74 stock market crash. I have to move the whole thing across. It's going a bit slow, so I won't worry about moving this all the way across. You can see that one's over there, the 87 stock market crash, and then further back. In fact, I'll just move it because it's not taking as long as I thought. In fact, it's taken a while to move across because my computer's running a bit slow. My son spilled water on my laptop, so I'm just using my there we go, the stock market crash over here. So I'm just currently using my Mac Mini for this recording. I have got a new laptop now. I just haven't used it for recording just yet. But anyway, that's a side thing. So, okay, Bitcoin wasn't around in 2009. So that's why we've only ever seen it hit these levels. I know this is the stock market, but Bitcoin has not seen that lower level. It has not seen that overall market capitulation like an event like what happened back then. And if it did, and it did get to those lower levels, then I've done my calculations already. According to my calculations, and I could be wrong, I'm just some guy on YouTube. Please, this is not financial advice. This is just to bear in mind not to go all in thinking that the bottom is in when it may not be. If we hit 20, anywhere from 18 to 24K, that would be $11,500 roughly, would be if you hit the equivalent here for Bitcoin of the stock market coming down to this level. So further down in the fib levels for the stock market as well. That could either be this one or this fib level. I'm not quite sure, but I certainly think it's not out of the question that could happen. And then, yes, it would be a few firsts for Bitcoin. It would be breaking lower than it's ever gone before on its regression graph. Instead of being here on the regression graph, it would be, you'd be at a lower color level. And so forth around that, the orange line there. There would be firsts, but firsts do happen in markets, especially markets that haven't been around that long. So it's not impossible. I won't say that's the most likely scenario, though. It's probably a scenario that will happen someday, but I don't know if now is that time. If it did happen now, then the similarities that it's got to the 1973-74 stock market crash is that crash was caused by OPEC's raising oil prices and embargoing on oil exports to the US. And right now we have raising oil prices as well and supply issues with oil and so forth. So that is one commonality there. Other commonalities are raised interest rates to try to fight off inflation. There's commonalities there too. The other commonality with the .com bubble bursting, as far as crypto is concerned, might be a bubble bursting around certain altcoin projects on crypto. So, that's something to bear in mind. So, when you talk about the kinds of currencies, though, that survive a bear market, the ones that have survived and thrived in the past and have even outperformed Bitcoin, some of these, since, say, 2017, are ones that either are to do with decentralized finance, layer one blockchains, or gaming, like Decentraland, or NFTs, like Engine. Yes, they are down from their all-time highs, but since 2017, they're actually gone up further than Bitcoin's gone up in that same time period. So it's, even accounting for the dip. So there certainly are some of those, but they are few and far between. So you have to be careful. The good thing about Jewel, DeFi Kingdoms, is that it has all of those things. It's got its own blockchain, so to speak. It's a subnet of AVAX, but it's got its own DFK chain. It has decentralized finance. It has utility, and that's the main thing. It has NFTs like Engine, but with more utility, and it has gaming. It's just not really fully developed yet. The game, but certainly it has that element to it as well. So I am long-term bullish about this project, especially if the developers keep developing, but I am short-term bearish because I'm not certain where the bottom may lie because of the unlocking mostly. I've got a lot of bullish things coming out, but there's always that fear of the unlocking, not just the unlocking itself, but also the fear that other people will be more fearful of the unlocking and hence, be bearish about jumping in. So therefore, they need to have a roadmap for what they're going to do there, because once there's some clarity, whether we like it or we don't like it, clarity means that some people become bullish because now they can have an expectation. Yes, I think that'll work, or no, I don't think it'll work. But when there's nothing there and we might do this or we might do this or we might do this, that causes uncertainty and it causes people to go risk off. So I think that would be certainly relatively bullish if there was at least a set plan. If they have more dates on the calendar, that will certainly help. More regular tokenomics reports I think would be helpful. But overall, long-term bullish, short-term cautious. That's all for me. For everyone out there, that's not saying, hey, go sell all your stuff. That's nothing the case, but don't be over invested. So just be cautious when it comes to making plays during the bear market, particularly if it's with altcoin projects. I will be talking to you guys about other stuff I'm doing to make money online. This is digi profits. It's not crypto profits. It's digi profits. So other digital stuff to earn US dollars, like Kindle books, or like drop shipping, affiliate marketing, making money from your own YouTube channels, and info products, and many other things. I mean, you can check out one of my other YouTube channels. I have got other channels like that. I don't have myself as the face, but I still manage, oversee. It's still my channel. Diabetes Smarts. That is one channel. Over 300,000 subscribers. Brings in, you know, regular daily revenue, like a decent amount per day. I can show you stuff like that. You know, there's a lot of stuff that I've been doing over the last 23 years now in online marketing that can teach you guys how to earn a side hustle, like more digital revenue. Even if your main thing's crypto, you may still want a side hustle so you can take some of this US dollars and put it into crypto, but you've got to have money to put into crypto if you want to buy the dips and all of that sort of stuff. So other forms of digital wealth will be covered in this channel as well, very shortly. So look out for that as well. Anyway, please like and subscribe to the channel, and comment, ask questions, or give your suggestions about what your thoughts are on what I have to say about this stuff. I'm interested to know your feedback, and I'll see you guys in the next video. All right, bye for now, everybody.